Good morning. My name is Frank Grinnell. I've been advising professional money managers and investing in the stock market for over 20 years. It serves as my day job, but most importantly, it is my absolute passion. On Street Views, I offer my daily viewpoint on the stock market in under 7 minutes. I will cover things like the global macroeconomic picture, the mood of the market, company-specific news, secular trends with some actionable sector and stock calls. I hope my insights are useful to you, whether you are a professional money manager or a passionate investor. At Grinnell Capital, we actively manage dynamic stock and ETF models for financial professionals and their clients, as well as individual investors. If you want to learn more about what we do, send me a note, frank@grinnellcapital.com. You can also find more of my insights on Twitter @GrinnellFrank. And now, today's Street Views. Hey, good morning. It is Tuesday, the 13th of September, 2022. Greetings again from Huntington Beach. Great time last night. Future-proof, lovely dinner hosted by Goldman Sachs, John Hancock, and Fidelity. Thanks for hosting us, and we had a lovely time. Great conversations with some great folks. Sorry to be the bearer of bad news. Core CPI up 0.6%, more than 2x expectations. Rates up, dollar up, futures down. Immediate reaction on the print after the market continued to lean bullish. It's been that way for 4 days now. That was the lean pre-print this morning. I think it was, just the pain trade. A lot of thought that the pain trade was higher, under positioning, what have you. Well, forget that. Forget that for right now. So hotter shelter, hotter food, hotter medical. Medical was a big surprise. Health insurance up 24% year on year, highest increase ever. There were some of the larger contributors to the reading. Services ex for rents, still sticky. Used cars dropped a 0.1%. Expectations were for a higher drop. So pretty sticky stuff across the board. Fed futures 90% chance of 3 to 3.25 for September, which implies 75 bips is 100% probability at this point. 22% chance of 100 bip tightening. Watching CDSs, watching spreads. So yeah, today's going to be interesting. This is definitely a surprise given, again, how the market was leaning. It just felt like the shorts were going to get carried out of their shields. Doesn't look like it at this point. The oil trade, from where we sit, may not be as easy in the short term as you might think. I mean, that's been one of the things that's worked all year in a higher inflation environment. If you do get a continued de-escalation of Russia-Ukraine, that could take the bid away temporarily. And then people realize that actually Russia has been exporting and selling this entire time to places like China and India. And our SPR is like empty. That could put the bid back into the market, but keep an eye on that in the near term. In terms of what to do, I think we're probably gonna round up our vol exposure a little bit here on the open. Things could get a little crazy over the next few days. If you did miss out on med device, have been uninvolved in that trade. That trade doesn't have a ton to do with inflation, in my opinion, when it comes to the component side or whatever. But they passed that along, and well, we've seen health insurance is up 24%, so they're ready for it. But that could be an opportunity. See what happens to the relatively expensive stocks that have suddenly acted awesome on positive fundamental news. Looking at Zscaler, we've talked about it a number of times in terms of software, the mission critical applications like cybersecurity, Zscaler, Palo Alto, the ones that I think really work going forward in the short medium term. Be really interesting to see how that Zscaler acts, because that thing acted like a champion on that really strong print. Great contracts won on the federal government side for them, but it's expensive, so we'll see what happens. Recession looking more probable given how bad the report is, meaning the work that the Fed's going to have to do to really slow this thing down. A number of notes out this morning. Brian Moynihan with Bank of America talking about how strong the consumer is. They're spending like crazy. Their balances aren't going down. Everything's great. That's part of the problem. So I don't know. That's a tough job for the Fed. It really is. Because I do feel that way. Like even being out here in Huntington Beach, This does not feel or look like a recession whatsoever when it comes to people, what they're doing, how they're spending, and just their habits. It looks like it's great times. So good luck out there, and hopefully you've got some vol on. That'll come in real. That'll make at least give you some green this morning, and we'll talk to you tomorrow.
And now for some important disclosures. Grinnell Capital is a state-registered investment advisor. Services offered by Grinnell Capital can only be offered in certain states where Grinnell Capital is registered or meets required exemptions. Registration does not imply a certain level of skill or training. For additional information about Grinnell Capital, including its services and fees, please review the firm's disclosure statement as set forth on Form ADV and available at no charge at advisorinfo.sec.gov. This podcast is provided for informational purposes only. The information contained herein should not be construed at the provision of personalized advice and is subject to change without notice. This material should not be considered as a solicitation to buy or sell any asset or engage in a particular investment strategy. Investing in securities involves the risk of loss, including loss of principal invested, and may not be suitable for all investors. Past performance is no guarantee of future results. This podcast contains certain forward-looking statements which indicate future possibilities. Actual results may differ materially from the expectations portrayed in such forward-looking statements. As such, there is no guarantee that any views and opinions expressed will come to pass. All expressions of opinion reflect the judgment of Grinnell Capital as of the date of publication and are subject to change without prior notice. This podcast contains information derived from third-party sources. Although we believe these sources to be reliable, we make no representations as to the accuracy of any information prepared by any unaffiliated third party incorporated herein and take no responsibility therefore. This podcast is provided with the understanding that Grinnell Capital is not engaging in rendering legal, accounting, or tax services, and we recommend that you seek out the services of professionals in these aforementioned areas. The principal investment focus of the accelerator model, the strategy, is to achieve strong relative and risk-adjusted returns, primarily by investing and trading in securities issued by companies that focus on the global information, technology, consumer, healthcare, industrial, and infrastructure sectors. These sectors are characterized by robust secular growth, an abundance of both new and maturing product cycles, a high degree of competition that creates the potential for relative winners and losers within a subsector or theme, a high degree of revenues and earnings volatility, rapidly changing sentiment and public perception, significant yet unrealized potential for globalization, and superior relative liquidity. Investment in the strategy is speculative and involves a high degree of risk. The second investment model is called the ignition model. The ignition model is an all-exchange-traded fund, ETF, strategy with investment objectives similar to the accelerator model. This model seeks to capitalize on long-term growth trends experienced by the market leaders in various areas and sectors. The ignition model will also seek ETF investments based on cyclical forces experienced in the U.S. and the global economy. This model is also designed to have the ability to offer some downside protection in the event of significant market stress through investments in ETFs designed to take advantage of market volatility. The strategy's performance can be volatile. Grinnell Capital has total trading authority over the strategy. The use of a single manager applying similar trading programs could mean a lack of diversification and consequently higher risk. For more important disclaimers, please visit our website, grinnellcapital.com.